Hi, I'm John Stevenson, the Guaranteed Retirement Guy. Today we're going to be talking about using annuities with a COLA, a cost of living increase, or laddering annuities for increased income as you age. So I had someone reach out to me the other day and they were just wondering if I could do a comparison between maybe a SPIA or a DIA contract that had a COLA rider attached to it, a cost of living adjustment that was guaranteed, versus just buying multiple annuities, which we call laddering, and activating income at different times. So I'm going to share my screen. We'll go over this together. There's no wrong way to do this. You just have to realize that if you want to start income right now or later, and you have a specified amount that you want to, as far as guaranteed increases every year, then stick with a SPIA or a DIA, okay? Because that will be something that you absolutely know what the increase will be each year. Otherwise, if you want more flexibility and you still want increases, which oftentimes are much, much higher than inflation, then I would recommend going with laddering annuities with an income rider, okay? So I'm going to share my screen and we'll go over both of these. All right, so we're looking at someone who's in California, $350,000. They're 60 years old. Their spouse is 61. And if we look at an immediate payout, you'll see here that the highest, and again, you'll notice some of these, and you'll see this on my website. If you go on my website and look at income riders, you'll notice that some of them will have these astronomical payouts versus maybe something that's a little bit lower, but guaranteed for life. And that's just because these are accelerated payouts in the beginning and then they lower it later on. I would not recommend these, okay? So I'm going to go in here and I'm going to uncheck, or I'm going to check this box just so you can see the difference. So again, this is showing highest guaranteed payout, and I'm going to go in here and I'm going to say top annuity per carrier, just to kind of clean this up a little bit. So when we're looking at highest immediate payouts, it's $22,750, and that's based off of $350,000. That's a joint payout. So that's very easy to do as far as if you want to start income right now, and then you might decide, hey, I want raises later on. How do I do that with a laddering approach? Well, you purchase one annuity, you've got one, in this example, it's $350,000 and you're starting income immediately. But you might want to start income every, 5 to 10 years, but with smaller premiums. So maybe we'll put in $350,000 right now to start income right now. And then we'll say, let's say, 2 more contracts for $100,000 each, but you're going to activate income later on to give yourself raises. So then what you do is you say, all right, well, I'm going to, I'll wait till I'm 66 and I'll activate income. The nice thing with income riders is you can activate income whenever you want to. It's very, very flexible. Versus a SPIA and a DIA, you got to choose the date and you cannot change it. All right, so if I defer this for 6 years and it's a $100,000 contract, I've already got the $350,000 that's paying me my annual income of $22,000 a year guaranteed for the rest of my life. But after 6 years, I want to activate the second contract. So if you go down here, you'll see that's with Corebridge. So Corebridge pays out $10,872. Guaranteed, it's joint income for the rest of my life. And you can see all the other options here. There's lots of different companies. But if you want the highest payout, and Corebridge is a great company, then you can see it's $10,872. Now, so I have that going. I got $22,000 plus I've got almost $11,000. So at this point, I'm at $33,000 a year from 2 contracts. Now, for the third contract, because I bought that other one for $100,000 as well, let's say I'm going to push it out till 73. Okay, maybe I've got RMDs and required minimum distributions, and maybe I funded these with an IRA. So I was like, all right, well, I'm going to wait till 73 because that's the latest I can wait to start RMDs for this, and so that's what I'm going to do. And you can decide to wait longer if you want to, but just for this example, you'll notice for $100,000, you're going to get $17,500 in income. That's incredible. So now you got $33,000 plus the third contract, which brings you up to $50,000 a year in guaranteed income for the rest of your life. So that's kind of how you ladder it out. That's how you give yourself raises. And this is just an example. You might decide to turn on income every 10 years. You might decide to buy more or less annuity contracts, just depending on your own individual situation. But that's what you would do. If you want to kind of beat inflation but use lower premiums to do it, that's the power of deferral. That's what you can do with annuities. And so you use a larger portion up front to buy the income you need right now for life. But also, knowing that you're going to need raises later on to combat inflation, you might decide to purchase smaller contracts, maybe $100, $100,000 a piece or more, just depending on what your desires are. And then you can activate those whenever you want to. And so that's what we would do. So we would get on a call together and we would chat about your timeline and see exactly when you might activate income and look at the best annuity carriers for that. Because you can notice there are 3 separate carriers that are better for different deferral times. One for immediate, one for like 6 or 7 years. The other one we pushed out to 13 years. Okay. So it just depends on your goals and what you're looking for. I have access to all the products, so I am able to do a full comprehensive review and plan for people who are looking to really set up the best strategy for them. Okay. So anyways, let's talk about SPIAs. Okay. Because SPIAs, it's a lot more simple, but there's no cash value. There's no flexibility in these contracts. So you do have to realize this, but some people like just the simpleness of just, I throw in a certain amount of money. I know I'm going to get an increase every year, no matter what. Okay. So we'll go over here and we'll look at, I'm going to go to this SPIA calculator here and we'll work through the same number. So I'm going to say, all right, so this one, I want to do joint just so I can have a same comparison here. Same $350,000. Now, $22,000, remember, was our immediate payout in the beginning with an income rider. Okay, let's see what it is. And I'm not even going to change. I'm not going to do the COLA yet. Okay, I'm not going to do that cost of living increase yet. And we'll just see what it is, just bare bones. All right, so $1,854 per month. That's with New York Life. All right. 1854 times 12 is 22,248. Pretty comparable. So that's awesome. That's awesome to see. So you could, if you wanted to turn something on, like with New York Life, you can get pretty much the same income as the income rider, which was paying you around the same amount. So the thing you have to keep in mind, though, is once you activate, once you buy one of these SPIA contracts, it's irreversible. Okay, you cannot change it. You cannot get the cash back. You cannot cancel it. Whereas with the other one, you can. Okay, so just remember that with income riders versus SPIAs. All right, now let's go back because we want to make sure that we can add a COLA. So, of course, that's going to change things. So if we add a COLA, it's going to start us out at a lower amount. So how much lower? We'll find out. So if we look at, let's say 3%, every single year, guaranteed. So, all right, so it starts us out, it doesn't start us out at 22,248 or what was it, 1,850 a month. It starts us out at 1,280. Okay, so that's quite a bit different. So 1,280 times 12. So that's not too bad. I mean, it's still a $7,000 a year difference. And so it's going to take time. It might take 5 to 10 years for it to get up to the 22,000. That's what you have to keep in mind is kind of that cost of waiting. It's simple though. It makes it very easy as far as you know exactly what your increases are going to be, you know how much it's going to be each year. So that makes it very easy to plan for the future. Now, if I want to say, well, I don't want 3%, I want 5. I think inflation is going to be crazy. Or I just want bigger raises. Okay, well, you can see Integrity Life will do it, but they'll start you at 917. That's like half of what you would with just a level payment. Okay. All right. So that's kind of extreme. So let's go back and say, well, I just want to do 2%. Hopefully they'll get inflation under control and we'll average 2%. Okay. All right. Well, that's not bad. So we're kind of in the middle of the row at this point. 2%, 350,000 is going to give me $1,460 per month. Okay. So 1,460 times 12, that's 17,500. So we're getting up there, but we're still $5,000 away from where we could have gotten as far as the level payment in the beginning. But that's something. I mean, that's what you have to do as far as fixing that is you just have to do more premium. You say, all right, well, $350, that's not going to do it. So I don't know, what's $450 going to give me? So $450 is still with the same 2% COLA every single year, guaranteed. So nothing changing there. All right, now we're back up. So now we're at that $22,000, a little over $22,000 a year. Okay, so 1878 times 12, yeah, 22,536. So that's what you're getting every year, and it's going to increase every year, 2% every single year, guaranteed for the rest of your life. So what you just have to keep in mind, though, in order to get that level payment, kind of in the beginning, just like that. what you would do is you'd have to put another $100,000 in. So not $350,000, but $450,000. But at least you know it'll go up by that percentage every single year. You cannot change it. It's irreversible. But at least you know exactly what it's going to be. And it's going to be very, very consistent. So there's nothing wrong with either of these approaches. And it just depends on your personality, what you're looking for. Maybe you just want to set it and forget it, and you don't want to ever have to think about it again. Then maybe a SPIA would be a great option. Okay, you just realize you're going to have to put more money in the beginning. Now with an income rider, as you saw in the earlier example, you notice you can get a lot more income. Okay. Do your calculations. I mean, you can go to ChatGPT and just ask it, what will $22,536, what will the income look like over 30 years if I add a 2% increase every single year? If you put that into ChatGPT, it'll tell you exactly what it'll be. It'll show you how many years it'll take you to get to whatever those amounts are. If you were to do an income rider, like maybe you might decide, well, an income rider is going to give me $1,000 a month raise here in like 7 or 8 years. And then I can get a $2,000 a month raise if I wait longer for the third contract. You can kind of sit there and say, all right, is this worth it? Also, do I want no liquidity? Do I want the option to be able to cancel my contracts? So lots of things to think about. Usually an income rider is what people choose because they want the most income. And usually those will pay them the most lifetime income out of any other option. Not always, but usually, and they're definitely more flexible. So I hope this video is helpful. I just kind of want to dive in and compare the two because I get these questions a lot, and I hope this video is helpful. If you want to book a call and you're thinking, hey, I'd like to buy an annuity, I'd like to look at the different options for me, then go ahead and do so. You'll notice there's a link below this video, it goes directly to my calendar, and we'll hop on a call and see what you're looking for, and I'll explain all the ins and outs, and you can get all your questions answered. You can go to my website as well. If you don't want to book a call, you can go to my website, johnstevenson.com, and you can look for yourself. You can see all of the annuities that are available, use my annuity calculators, and then at that point, if you want to book a call, there's a link on my website as well. So I try to make it really easy, not into high-pressured sales pitches. I don't like them. I'm sure you don't like them either. But if you are looking for an annuity and you are looking for someone who's transparent, who shows everything, then I'd invite you to book a call. So anyways, I appreciate you watching. Hope you enjoy the channel. If you do, make sure you like, make sure you subscribe, make sure you share. And then of course, if you have questions, you have more questions, there's comment section below. Go ahead and comment there and I'll answer those as well. So anyways, thanks again for watching, and we'll see you next time.